If you're currently playing this video, it's probably because you want to learn how to trade Forex. You want to analyze the market like a professional trader. You want high risk to reward ratio setups with a bunch of pips, right? Everyone wants it. So this is the best thing you are going to get today for free in YouTube, because this is the in-depth gold analysis of what we took in 𝗦𝗫𝐴𝐹X VIP in the last Thursday. So let's get started, and we're going to break down from the 4-hour time frame to the 3-minute time frame so that you can understand what all the confluences that we used to take this. So let's get started. In the 4-hour time frame, if we just jump in and pick, we can clearly see an order block area. So people who are familiar with the concept of smart money probably aware of this, but those of you who are currently new about smart money concept, about institutional order flow, then I'm more than happy to discuss. So order block area refers to a manipulation zone in the chart where the institutions have opened an order opposite to the current order flow. So the current order flow is bearish, right? The price is moving down and it is just melting, literally melting. So the institutional order flow was this candle. This was the manipulation candle. This was the candle that attracted all the buyers in the market. Simply think like this: if you are a retail trader, after seeing this support line, you probably thought of going long, right? Because this was a bullish engulfing candle in the 4-hour time frame, and you had all the confluences. You have these clean candles over here, so why don't take this opportunity, right? This is where the institutions play their cards to just trap you. So we were well aware of the situation that the price will tap this order block, because price always revisits the area it manipulated, and history just repeats itself, right? So we just went into the 30-minute time frame just before NY session, and we just had a look at something really interesting. So this was the order block area that we were talking about, and price had a significant rejection after just tapping it. Just look at my cursor. Price simply just tapped the order block area and had a significant rejection. Now if we just jump into the 5-minute time frame, this is where all the game began. So this was the order block, FOMC order block. Also, one thing to mention, this was the order block of during the FOMC session. So this was heavily manipulated, heavily biased section of the chart. So the price just had to revisit this area so that it could just close all the positions that are currently running in drawdown. So the manipulation candle, this was the manipulation candle that tapped the order block. And if we just take a look at the 3-minute time frame, just before NY session opening, the price simply created some equal highs. So if you are a retail trader, if you are familiar with the concepts like support, resistance, you probably thought this as a resistance line, right? And this is a resistance line, and price had a bearish engulfing candle, so you probably went short with keeping your SL right above this wick. So what price did was actually really interesting. It just simply grabbed this liquidity with this move. But this was not our confirmation. This 5-minute engulfing candle was not our confirmation. After this candle got printed, we just waited for the price to retrace for a bit, because you just don't know. You'll have to be fluid to bias when you are trading Forex, because anything can happen. There is a 50-50 chance that the price simply just had a rejection from this area and then went up, right? So we had to look at every confluence as possible. So what we did was we just started taking preparation after this candle got printed, and just when this 3-minute candle started having a rejection, we just went short, keeping our SL light right above this wick. So we had to measure our targets, where we are going to secure positions, where we are going to just take place our TP. So this was the place that we used to just secure a position. The reason behind it is simple. This was the candle that just grabbed the Asian lows, right? You can clearly see that the people who thought of going long from this area just had been taken out with this move, because after seeing this engulfing candle, many retail traders thought of going long and probably went long, keeping their SL below this equal lows. So what price did was, what just at the very beginning of London session, price simply grabbed this liquidity and went up. So this was a zone to consider. That's why we simply just closed partial and moved our stop loss to our entry right here. So after this zone got broken, we simply did was we set up a target for our trade. This was the NY manipulation of the very first day of the trading week. The last Monday, the price simply created equal lows around here, which weren't taken out. So we had to set the targets around here, because this was an important level just above 1750, and we've got some equal lows around here. So this was a zone that we had to consider. So this was an amazing trade. After simply around after, let's say, 30 minutes, the price eventually hit our TP, and we just had an amazing trade. It was 180 plus pips with a risk to reward ratio of 1 to 4.83. Our SL was right above this week. So this was everything for today. If you want to learn how to trade Forex, if you want more analysis like this, if you want analysis of a certain pair, you can always knock us on Telegram. You can simply find our Telegram group in the description below. And if you want the analysis of the certain trades that we took, you can always comment, you can always knock us on Telegram, anything you want, because after all, everything is for educational purpose, because we want you to learn how to trade Forex, because this although this requires a lot of patience, but we see the potential in our youth that people can simply just change their life using just learning these techniques. So that's all for today. Thank you.